Man, check that out. Brand new bank just came in, right? I mean, listen, the economy is growing, hustling and bustling, and yet with rates on the rise, real estate prices on the rise, that means payments are on the rise. There's a lot of people getting a little jittery. They're wondering, man, when is this market gonna crash? Is it gonna collapse on me? Is it gonna hurt me? And you know what? A lot of people look to me and they want to know, Kris, what do you predict? What do you think is going to happen? When do you think the market is going to collapse? Because guess what? I'm buying a ton of real estate. I'm buying record high real estate more than I ever have before. So a lot of people look to me and they want to know, Kris, what are your predictions? What do you think is going to be happening in 2022? So for you, I got together with my team, I got together with my experts, and we evaluated the market. Today, I'm gonna talk about the biggest hinge points, inflection points in the economy, and I'm gonna help you understand what I believe is gonna happen in the economy so you can best plan for this year and make all the right moves and not get caught up in a wake of disaster.
One shot, now the future is yours, go! I'm turning dreams into reality, yeah. It's one shot, now the future is yours, go!
It's interesting to me that more people don't invest in real estate when factually 90% of all millionaires made their money doing this stuff right here. This is the backside of entry-level American dream real estate. These are homes that people live in, and these are homes that people buy every single day. This is the hot commodity that we are missing 5 million homes worth of. And so, listen, even though I'm a big believer in real estate, I believe that you have to be smart and intelligent. When 2008 hit, man, that recession, it crushed most people. It hurt developers. It hurt people that had bought portfolios that were over the median. And you better bet, I've been waiting for this economy to show up because right now, it looks like the golden years on the outside. It looks like this is the time when the Rockefellers are made. This is when people are gonna crush and win. But if you don't have the right optics, if you don't have the right strategy, and if you're not reading the right signs, you're gonna get caught in a really bad way and frankly have to do a do-over. You have to lose everything. And I refuse to go through that. So one of the reasons why I'm making this video today is because I got a lot of real estate partners all over the world. We buy real estate together and they're curious, Kris, what do you really think about this market? Do you think we're heading right around the corner for the next collapse? And if we are, how do we protect ourselves? How do we protect our assets? How do we make sure that we don't get caught up in that? Well, this video is for you. Well, listen, today we're gonna talk about the Fed, we're gonna talk about Putin, we're gonna talk about everything, inflation that is affecting this real estate market to really take a look at 2022 and really say, hey, is everything really moving towards a collapse? Check it out. For you to understand the climate of the game of real estate, there's 4 things that I want you to understand about real estate because all of them have an impact on when you should and shouldn't buy real estate. There are ultimately 4 different ways to make money in real estate. One of those is obviously cash flow. Do you understand that right now for investors buying property because prices have gone up and rents haven't caught up, that guess what? Cash flows have shrunk. So that's definitely impacting investors. When you take a look at principal reduction, not much is changing there other than I'm paying more for a house. So literally I'm paying off a house faster because there's more of it to pay off. Depreciation and taxes. Right now with some of the tax cuts, with the tax additions, with the government's view on some of these things, real estate is becoming increasingly important for a lot of people that are saying, whoa, tax deductions and savings that come from that is now actually more important this year than it was before. And then appreciation, right? I mean, hello, real estate is going up in value. Is it gonna keep going up in value? You watch my other videos, I talk about the fact that we're missing over 5 million homes. And as long as that is true, we can't have a true crash until we satisfy that. What that's doing is that's driving the prices up. Will that slow? Will that increase? All really good questions.
You must ask the right questions.
Here are the things that we're going to be talking about today. Number 1, how desperate will Putin get? Like, you understand that the war on the other side of the world is leading to all sorts of supply chain, cost of goods increasing in natural gas, wheat, etc. We've got commodity disruption, right? Both the supply and demand sides are shifting violently. And then you've got like bad inflation to replace good inflation. It's certainly getting harder to control. I know you're thinking, Kris, is there a good kind of inflation? Well, just to be really clear, that if you have your money sitting in the stock market, inflation is horrible. If it's sitting in real estate, it's amazing. In fact, appreciation, inflation, guess what? There's a really strong correlation and relationship there. Then the Fed is in a tougher spot. Like, How are they going to control this good inflation with rate hikes that we're going to have to undertake against bad inflation showing demand, or the war in Europe, fuel, food shortages? And finally, we're going to talk about earnings and margin compression, right? Many companies are lowering earnings guidance and resetting expectations on margins given that wages and material costs have really gone through the roof. So everything is shifting under our feet in a really big way. And guess what? That's all going to impact real estate. The first thing to understand is, how are Americans doing, right? Like, how are they faring through these very turbulent times? It's important to understand that housing debt service ratio is down lower than it's been in decades. So what that means is Americans, they're on top of their debt. They're not in more debts than they want. They've satisfied those debts. They've gotten out of debts. They've got it under control. And household net worth, look at this. It's actually gone up higher than we've seen it. Look, this goes all the way back to the 90s, 30 years ago, and net worth is actually looking really, really strong. So as a people, financially, we've got our ducks in a row. The question is all this outside stuff, how's that gonna affect us?
What if you don't get your ducks in a row?
I'll get my ducks in a row.
Yeah, but Kris, how are the banks doing? Are they in good shape? Are they in bad shape? Well, look at the huge disparity up here. With JPM deposits versus loans, we've got deposits massively on the rise, but loans are right here. And guess what? For a bank to be a bank in business, it has to take these deposits and it has to create loans, which means they're desperate to place money right now. They need to get it stimulating the economy so that they can get their earnings for the banks to actually work. Another thing though that is personally hitting me hard as an investor for my group of people that I hang out with is when we buy a home, we look at the fact that, yeah, this thing's gonna go up in value over time, but what am I actually getting on my money put out today? You know, if I come up with an amount of money that is a down payment on an investment property, some of that money is calculated to come back to me in what's called a cash on cash return, meaning I put out X amount of dollars and then through positive cash flow, some of that comes back. Positive cash flow, you know, before the pandemic was sitting often at 7, 8, 10, or 12%. Right now, that has shrunk down to like 1, 2, 3, 4, 5%. In other words, cash flow has been negatively impacted dramatically. And right now, especially because of this, if you take a look at the 30-year fixed mortgage rates, this is with Freddie Mac, you'll see that, oh, like we're doing great with rates going down, 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 down. But guess what? They were down at 2.65. They just adjusted up 2 full points higher. And that's now making money more expensive to anyone who's borrowing for a primary residence or for an investment property. And you know what? When cash flow gets crunched, then people get a little bit weird.
Let's get weird. Let's get weird.
So Kris, put it all together, man. What does this mean? Let's talk about some of the assurances that should make you feel good. Let's talk about some of the concerns. And you know what I'm going to do? I'm going to share with you my personal predictions. First of all, some assurances. Earnings are really still strong. Companies are doing really well. Banks, rock solid. In fact, they have money that they need to lend. Cash right now, it's everywhere in the market. There's lots of it. Interest rates, they're still actually considered really low. We have to see whether later this year the Fed's gonna like literally rise them or actually bring them back down to fight against this crazy inflation. The Fed, either way, they're gonna try to accommodate us, I believe. And then finally, household balance sheets are great. These are all the positive things that you would ever wanna see in a really strong economy. However, here are the concerns. Inflation. Will the Fed really be able to overcorrect it, or is it gonna spin us off into a recession? How desperate is Putin? Is he gonna keep at it? Is he gonna keep pushing? With all these sanctions, is he really gonna take supply chain issues with Russia and ruin it to the next level? And then are we building up junky assets? Like there's so much money moving, are we paying attention to make sure that the assets are good or bad? Because remember the Great Recession of 2008, we built up all of this junk debt and then we had to find a way to get rid of that in the open market. That created a huge part of the problem. We've got investor complacency like, oh man, maybe it's always going to be this good, right? And then finally valuations. We're continuing to see those valuations increase. And at some point, you and I both know that the average American can't afford a $500,000 house. We are 100% trucking in that direction. So people want to know, Kris, predictions, how is this really going to play out? I'm the first to tell you that I would have never guessed that we would have had a pandemic 2 years ago and that it would have had such negative repercussions on our economy. And so I don't know if anyone really could have seen that coming. So, you know, I think it's a dangerous game to play the prediction game when you have this many strange, weird variables in such a new and different economy. But what I want to do today is I want to share with you some of my core beliefs that I'm going to be financially acting on with my own hard-earned cash. And here they are. I do believe that the economy eventually has to slow down, right? Because it's right now functioning and growing at a breakneck speed. The Fed, I do not believe that they're going to over-tighten and push us into a recession. I think they're going to do their best to try to figure that out, but I do think we're going to be facing a lot of really high inflation. And if you keep your money in soft assets like stock markets, 401ks, IRAs, you're going to experience what's going to feel like a tremendous loss of wealth. Literally could be half your assets over the next 5 years, which means you could experience the inverse of that if you're actually strategically invested in real estate. You're going to definitely feel some inflationary pressure, but certain asset classes, right? Oil, natural gas, wheat, you're going to see these things skyrocket and go up higher. It's not necessarily going to lift the prices of all commodities, but we're going to see that certainly in some of these. Supply chain, right now it actually looks like things are starting to improve there. Let's hope that there's not a weird, like another pandemic thing that like throws a wrench in that gearbox. We'd love to see that come back online and create some more normalcy. And then finally, the housing shortage. I believe it's going to improve with the fact that we're now getting more supply coming online. We're starting to catch up a little bit to that. And then obviously the higher mortgage rates is really going to get in your face and say, hey, are you serious about buying a house? Or are you messing around? Like, are you really in earnest about getting a property, or was that more of a wish than a need? And so I think that's going to help feather out the market a little bit. Do I think that this is going to lead us to a housing crash, inside 2022? No, I can't see that. I find some comfort knowing that you can't really experience a real estate crash until all of your demand for supply has been satisfied. And right now we've got the greatest demand that we've ever had in the game of real estate. So that's the one thing that's really going to be the X factor in the game of real estate. This doesn't mean that you won't experience a crash in the stock market or in other sectors, but in the game of real estate, I don't think it's going to happen until we actually satisfy the true demand that is out there. It's my personal opinion that you're literally sitting in the best 5 to 7 year gap for wealth creation than we might ever see in our entire lifetime again. I study the K-wave Kondratiev cycle, and basically we wait 80 years to experience the things in the market that we're experiencing right now. Recently, I came out with this book. It's called Have It All. It's about 5 investment strategies, and I'm talking about things in this economy that nobody else is. It's not about strategy and diversification alone. You know what it's really about? It's about ROI diversification. If I invest in this and it produces a double-digit return, or I invest in that and it produces a triple-digit, now I'm doubling my money every 3 years, over here every year, and over here every single 30 days. This book is really where people should be investing to do what the wealthy do so that you can become a self-made millionaire. And since it just came out, the first truckload that is literally now sitting, at my company, we are rapidly shipping these out to people like you everywhere that are getting your copy for free. Other than the cost of shipping in the link below, if you want to pick up a copy of Have It All, click the link below, get this book. This is the most complete financial roadmap for this economy of how you become financially free in 5 years or less. And we're sitting in the best 5 year gap possible. So grab a copy of this book. It will, I believe truly, this is my life's work. This book is mind-numbingly mind-blowing in its power to help you take things that are really complicated, make them very simple, and learn how to get in the game with a simple step-by-step roadmap. Pick up your copy. Man, how high can inflation actually go? If it gets up to 18%, they're going to call it hyperinflation. And there are several experts that actually believe that that is right around the corner, and it's barely been held off at bay. If you're concerned about inflation, and you should be, because it's going to have the largest impact on your finances than anything else moving in the market today, and it's going to impact whether you have no wealth or tons of wealth over the next 5 to 10 years. So if you want to know how to get ahead of the game, click this video, learn about inflation, and let me show you what's coming next with it. To make sure that you position yourself the right way, make sure you can take care, fudge.
Should we just do another angle and just say take care? Start from take care?
It was such a good take.